Welcome to Fear and Greed Summer Investing Series, brought to you by Vanta, specialists in compliance-led growth. I'm Sean Aylmer. Everybody wants to know about the Magnificent Seven, the household names on Wall Street, but what are some of the other stocks on global markets that we should be looking at? Today, we've got an expert in the space to pick out stocks he thinks are worth watching. As always, this is general information only, and you should seek independent advice before making investment decisions. William Liu is a senior investment analyst at WAM Global. William, welcome back to Fear and Greed.
Thanks, Sean. Great to be here.
We have about 4 minutes. I know there are 6 stocks. Let's jump into it. TradeWeb.
I'll try to be quick. So TradeWeb, they're the leading platform for fixed income, particularly US Treasuries. They're a market leader in the space. They have a dominant position, particularly in US Treasuries. So we think the electronification of the fixed income market is a secular trend, and there's no reason why trading should move electronic. So most of the trades are done through voice right now. We see with other asset classes, as they move towards electronic trading, you get better liquidity, better price transparency, better workflows. So we think it's inevitable that fixed income trading will move electronic. TradeWeb being the dominant player, they're doing extremely well in US Treasuries, and they've started to get a really strong handle in US corporate credit as well.
Okay, number 2, Market Access, AXXESS, isn't it? It's an unusual spelling.
Yes, it's actually quite... so Market Access and TradeWeb fit into a similar bucket. They both benefit from the electronification of fixed income markets. TradeWeb, which I mentioned earlier, is stronger in US Treasuries. Market Access has a stronger foothold in corporate debt, both high grade and investment grade and high yield. So again, it's a similar thematic with the long-term secular driver of moving to electronic trading. As I said earlier, better price transparency, better workflows, better liquidity. And we can see that the unit economics typically flow to the two dominant platforms. And we're very convicted that there's a great long-term opportunity for both TradeWeb and Market Access.
Okay, we'll move out of the trading space. SAP.
SAP, it's one we've held in the fund for a long time and we're super convicted on. And so we think it's a big beneficiary of AI. We've seen the AI beneficiaries in the infrastructure layer. So we talked about Nvidia and the hyperscalers. So clearly they're seeing the greatest amount of investment dollars right now. We think for the productivity and efficient gains of AI, a lot of that will actually move to the software application layer. And we think SAP is going to really benefit from that. So their customers are realizing the most valuable data in their organization sits on the SAP system. So they can match the most valuable data for a company with a large language model and really generate some really unique insights for business AI. On top of that, they're transitioning the business model from licensed to recurring cloud-based revenues, and we see a really good visibility for earnings growth ahead.
Okay, we are racing through them. Adobe, one that we all know of, but why do you like Adobe?
A similar vein, again, we think it's a beneficiary of AI in the software application layer. We think they have the leading enterprise software provider for creative professionals and sophisticated marketers. We see Adobe as advantage given their superior product in the sense of design tools, capabilities, distribution, and its library of content. And we're encouragingly seeing lead indicators of AI proliferation with significant engagement in its AI tools, generation capabilities, and the use of its tools such as GenAI Studio and Firefly. We expect positive catalysts in FY25 as they monetize these capabilities and announce new pricing strategies.
Okay, we're changing sectors here. Expedia, we've all used that one. Why do you like Expedia?
Yes, so Expedia, as we all probably know, is an online travel agency based in the US. It has really 3 core brands, which is Brand Expedia, Vrbo, which is its alternative accommodation business, and Hotels.com. So the reason we like Expedia is that we think that consumers continue to prioritize experiences. While the consumer sector has been quite volatile and consumers are clearly being more discerning, it is clear travel and entertainment continue to be really resilient categories. The company also undertook a difficult decision to re-platform its entire technology stack into a single platform. So they're coming out the other side of that now, better poised to drive more efficient operations, more efficient advertising and marketing, driving customer loyalty across its different brands. We've been really impressed with the CEO, Ariane Gorin. She previously led the B2B business for Expedia, which has been an exceptional performer and is still really underappreciated by the market. So it's trading at 13 times PE for double-digit EPS growth, and we think that's really attractive.
Okay, the final one, William. It's a German ticketing and live entertainment company, CTS Eventim.
Yes, in a similar vein to Expedia, CTS Eventim is the dominant ticketing platform in Europe, and the company is based in Germany. So again, they benefit from consumers prioritizing experiences over goods. And we can see a really good visibility into the 2025 pipeline. The events pipeline remains strong and expected to be another strong year for the industry. And we expect the industry to grow high single digits in the coming years. We continue to see some of the long-term secular growth drivers intact as well, including the online mobile migration of ticket sales, increased artist touring because they're replacing some of the declining recorded music sales, and more differentiated ticket pricing models, which has become a bit more dynamic. So it's trading at 24 times. It's a market leader in Europe. It's stuff that we really like.
Wow, plenty to think about, William. Thank you for your time.
Thanks, Sean.
That was William Liu, Senior Investment Analyst at WAM Global. Remember to get your own independent advice before making investment decisions. This is Fear and Greed Summer Investing Series brought to you by Vanta. Vanta automates compliance for frameworks like ISO 27001, SOC 2, CPS 234 and Essential 8, saving time and money while building trust. Join over 8,000 companies like Atlassian, Dovetail and FireAnt managing real-time risk. Get $1,000 off at vanta.com/fearandgreed. I'm Sean Aylmer. Enjoy your day.